Hey everybody, Jeremy Peterson here with Vesta Real Estate in Ogden, Utah. Last month I promised you another video talking about the rental market and what we were seeing happening in that sphere and what we thought that might tell us to give us clues about what's happening in the bigger real estate market. So to give you some background, back in 2008 through 2012 we had the great financial crisis, which basically ended the big building programs that were happening in the state as many builders went out of business or pulled back on the amount of homes that they were constructing in the market. They were gun shy after near-death experiences during that crisis. Fast forward to 2017, and the state had seen a lot of in-migration, and our housing stock had not been keeping up with that in-migration. We began to see house prices increase and rents increase. In 2017, there was an act passed in Congress called the Tax Cuts and Jobs Act. And not to point blame at anybody, but that was passed by Congress and one other guy. So one of the things that this act did was create opportunity zones. These are geographic locations in various cities across the country where incentives were offered to developers to build in these areas. Here's a map of what that looks like in Ogden. So opportunity zones are unique in that they offer some very rich tax incentives for people to develop. In the real estate universe, there's a thing called capital gains, which if you buy a property and then sell it for a profit, that profit is taxed, typically at 20%. And that's a pretty hefty fee to pay for profits gained in real estate, but that's something that we all deal with and work with on a daily basis in this industry. Well, in opportunity zones, those capital gains are waived entirely after 10 years. So someone can build a big apartment building, keep it for 10 years, sell it, and not pay any tax on that gain over that 10-year period. So very, very juicy incentives. Now these incentives sound really exciting, and certainly in 2017 when these incentives started, you started to see development. You look around town and you can see some of these buildings that came up between 2017 and now. Certainly that has been a friendly place for investors to put their money and to make a return. The problem with every government program and incentive is that there are unintended consequences. And the unintended consequence of this program is that it has created lumpy concentration of investment. So in Utah, opportunity zones don't exist everywhere. They're in select locations. And also developers, in order to take advantage of this in constructing these apartments, they have to find a zone within a city that will permit it. And most of the Wasatch Front is suburban sprawl, right? Single family homes, lower density use in these suburban neighborhoods, bedroom communities to Salt Lake. So that meant that developers were driven to urban cores. Examples might be Ogden, Salt Lake City. We're going to give Clearfield an honorable mention because their downtown has been completely rebuilt with apartments over the last 10 years. But this concentration of high-density apartments is focused in very narrow places. So what that ends up doing is concentrating all this new growth in certain zones, and demographics don't keep up with that. So this gets into our basic Econ 101 problem of too much supply, not enough demand. We have a bunch of apartment buildings, and now we need people to live in them. In our experience, we saw some major changes happening right after the government shutdown started in October of 25. Since that time, we've seen rents in our vacant rentals drop anywhere between 10, in many cases, to as much as 20% in our lesser desirable units. Now, with all these apartments coming online, and there are a lot of apartments still being built and coming into this marketplace, They're coming into a marketplace where rents have shifted and vacancy rates are much higher. So let's talk about some of the recent examples that are out there. Our first stop is going to be here at the Q25 building at 25th and Quincy. This building's got 175 units. They're all low-income housing. It's a light-tech project. This building is 50% vacant. They canvassed the whole neighborhood with mailers, encouraging qualified households to apply and move into the building. And the best they've got right now is 50%, and they even, are pet friendly. Our next stop is over here at City Walk. You might remember this building in January of, I think it was 2025. This thing caught fire and burned down in a spectacular fashion, and it's now been reframed, sided, and they're finishing the insides right now. We look at 18th and Wall Avenue, the scene of another fire, but we have these giant apartment buildings going up there. At 5 points, 275 units are being constructed right there in this corridor. It used to be Weiniger's, and now it's this giant apartment block. We got the Wonder Block. The Wonder Block has 350 units being constructed in it right now. And then finally, it was recently announced what's going to be called the Alpha Malachi building, which is 101 units supported by 65 parking stalls, and that's going on the 26th block of Adams. So with all these units coming into this market, it poses an absorption problem. In 2025, Weber County only had about 2,000 people move into the county. Ogden City right now has about 900 permitted units in the process of being built. They're either approved and ready for breaking ground or in construction right now. 900 units. With normal household sizes being about 3 people, it would take a year and a half if every single person that moved into Weber County moved into one of these apartments. It would take a year and a half just to, at that rate, to absorb all of that inventory that's coming online. And Ogden isn't the only place in Weber County that's building new construction and apartments right now. So the county has an inventory problem. What is going to happen in the future here? We're already in a situation where we have soft rents and inventories coming online. What can we expect? Well, I expect that the current situation we're in is going to perpetuate itself probably for 2, maybe 3 years. I think the developers are going to stop building. I think the permits have already started to slow down as the writing's on the wall that there is an overabundance of rental properties in the market. It's going to be tough for these big buildings to perform at the level that they thought they were going to when they first planned the projects and started putting the projects together. The sad part about this is it has affected the ma and pops, the existing inventory that's already out there, that has been out there for so long. They are affected by this just as much as anyone else. And so that's a difficult thing. And they don't have all the tax incentives that the big apartments are getting right now. So I think it's going to be a tougher situation for ma and pops moving forward in the next 2 to 3 years. It's not impossible, but it'll be a little bit it'll be uncomfortable for some folks moving forward. The upside to all this is as permits back off, and frankly, most of the developable land in Ogden City has been developed. There is not too much land left to develop. That actually creates an opportunity because there will be limited supply moving forward. And once that absorption occurs, once we're through this absorption problem, then it's going to be increased rents and increased property values moving forward. And the other thing I should mention too is that real estate prices, particularly income properties, are tied to the rents that are generated by those properties. So an overabundance of rental units will probably have an adverse effect on the prices of rental property moving forward in time. Real estate prices are sticky. They don't come down very quickly. Rents come down as fast as they need to. They're very quick to respond to market conditions. But prices will be a little bit sticky The upside to all of this, though, is that as time moves forward, there will be buying opportunities in the marketplace. The challenges we're experiencing right now will turn over to opportunity, and there will be buying opportunities. If you're a mom and pop rental owner or an investor that owns income property and you're wondering what to do during this time, give me a call and I'll give you my advice on what you can do to prepare your property and your portfolio to weather this storm. Thanks for tuning in.